Get ready because starting around 2026, your wallet is about to get a major digital upgrade. Yep, the UK is rolling out the digital pound, and it's a change that's set to transform how you shop, save, and spend your money. But what does this really mean for your privacy and for your control over your own finances? Well, today we're going to break down everything you need to know.
So, to really get a feel for this, let's start by imagining something simple, an everyday task that's probably just around the corner.
Picture this. You're doing your weekly shop. It's a scene you know well, right? You walk into your local supermarket, you grab your usuals, bread, milk, maybe some coffee. So far, so normal.
But then you get to the checkout, and here's where it changes. You don't reach for your wallet. You don't fumble for a card or search for coins. Nope. You just tap your phone on the reader.
And just like that, poof, the payment is done. It's instant. There's no waiting for the machine to connect, no card declined message. It is completely, totally seamless.
This, right here, is the experience that's at the very heart of the digital pound era. It's a fundamental shift in how we're all going to interact with our money.
Okay, so let's get into the nitty-gritty and answer the first really big question. What exactly is the digital pound? So, the digital pound, which you might hear called Britcoin, is a central bank digital currency, or a CBDC. All that means is it's an official digital version of the pound we all know, but it's issued and backed directly by the Bank of England. It's basically cash, just in a digital form.
Now, it is so important to get this straight. This is not a cryptocurrency like Bitcoin. You know how crypto is decentralized and its price can be all over the place? Well, the digital pound is the exact opposite. It's centralized, it's stable, and one digital pound will always be worth one traditional pound.
Honestly, the easiest way to wrap your head around it is just to think of it as digital cash. Instead of having physical notes and coins rattling around in your pocket, you'll have secured digital tokens in an official, government-backed digital wallet, probably right there on your phone.
So that brings us to the next obvious question. Why? Why is this all happening now? And why is the UK moving so fast on it? Well, it really all boils down to three main reasons. First, the simple fact that, let's face it, we just don't use physical cash like we used to. Second, there's a growing demand for payments that are faster and more efficient. And third, there is this huge potential for some really cool financial innovation.
And I mean, you can see the story right here. A decade ago, cash was king. It was used for most transactions. And today, contactless cards and mobile payments completely run the show. The digital pound is really just designed to be the next logical step for an economy that is already digital first.
And it's that third point, financial innovation, where things get really interesting. The digital pound could introduce something called programmable money, and that means automated rules can be built directly into our money, into our transactions.
So what would that actually look like for you? Well, at the supermarket, a single tap could pay for your shopping, instantly add your loyalty points, and apply any discounts you have. But it could go so much further. Think about getting a government benefit payment that can only be spent on certain things, like groceries or utilities. The possibilities are, well, they're kind of endless.
Of course, this level of innovation, this whole idea of programmable money, it naturally leads to some very big questions. And it starts with maybe the most important one of our time, privacy. And you know, people are really split on this. On one hand, supporters say, hey, this will cut down on fraud, make transactions faster and cheaper, and help bring more people into the financial system. But on the other side, critics are seriously worried about the potential for government surveillance, centralized control, and of course, cyber attacks. It's that classic trade-off, isn't it? Convenience versus control.
So to try and quiet some of these fears, the Bank of England has proposed what they're calling a tiered anonymity system. The idea is that for small, everyday purchases, like buying a coffee, your identity could stay anonymous, just like using cash today. But for larger transactions, like buying a house, you need more identification to help prevent things like money laundering.
Another idea being floated is a limit on how much digital pound you can actually hold in your wallet at one time. And you might be thinking, why would they do that? Well, it's all about keeping the banking system stable. They're worried about a scenario where everyone pulls their money out of traditional banks all at once, and this is their way of preventing that.
Okay, this is it. This is probably the #1 question on everybody's mind. With all this shiny new digital tech, is good old-fashioned cash just gonna disappear?
The official line from officials is that there are no immediate plans to get rid of notes and coins. But we have to look at the trend. Cash use is falling, year after year after year. As digital payments get easier and more woven into our lives, physical money is probably going to become a much, much rarer sight.
So let's zoom out for our final section here and see how all of this fits into the bigger global picture. Because trust me, this is not just a UK thing.
Far from it. The UK is absolutely not alone in this. China is already testing its digital yuan in a big way. The EU is hard at work developing a digital euro, and the US is seriously researching a digital dollar. What we're seeing right now is a global race to redefine what money is for the 21st century.
So the digital pound, it promises a future that's faster, smarter, and way more convenient. But it also forces us, all of us, to face a fundamental challenge. As our money becomes just another form of data, how on earth do we protect our privacy in a world that is becoming more digital by the second? That really is the defining question we all need to answer as we step into this brand new era of money.